Hey everybody, welcome back to the Wealthy Idiot Show. We have a show for you today. We're talking job reports, debt crisis, the stock market, interest rates and what's happening with those, and also what you may be able to find on the beaches of California. After the news, we have a reaction to a video where I actually land more on the conservative side than the Ramsey crew. And lastly, we're going to talk about an interesting way to view your finances as you're starting out your investing journey. You won't want to miss it. Stick around. Welcome back. My name's AJ. Before we get into the news, make sure to click that like button for the YouTube algorithm. It helps us out tremendously, and in exchange, we'll make sure that you're financially smarter than your friends, which is the ultimate goal here. That's what we're trying to accomplish. Let's get into the first article. NerdWallet reports May job data shows strong growth even as unemployment rose. Unemployment ticked up in May, but employers kept pumping out jobs more than enough to beat expectations. So it looks like we expected jobs to be at 190,000 increase, and it was at 339,000, which is outstanding. But weirdly, the unemployment rate rose to 3.7 from 3.4. This doesn't mean a whole lot. What that means is that there's more people entering the market than before, meaning that they may have tried to start their own business and were not counted in the unemployment stats, and now they're going back into job hunting and they're looking for something. So it could mean that like major corporations and businesses are the ones who have to report these jobs that are being opened, and they may be reporting new jobs, but smaller businesses that don't report these things, self-employed people, or just people living in their mother's basement who turn around and start looking for work don't suddenly have work simply because more jobs got created. So the unemployment rate could increase even though the number of jobs available is also increasing at the same time. This may be good news. We're going to have to wait month to month to see for sure. It doesn't really tell us anything useful yet. It pretty much says the economy's chugging along with seemingly almost no impact from interest rate increases and the Federal Reserve, which is bizarre. USA Today reports that debt ceiling plan passes the Senate. Who wins? Everyone, and here's why. I'm not entirely sure that that's true, but it looks like it has passed the House now. It has passed the Senate. It's up to President Biden to go ahead and confirm it, and he most likely will because this is the deal that him and McCarthy, the Republican majority leader of the House, have actually agreed on ahead of time. So he will most likely sign this, and it will go into effect. The compromise looks something like this. There's a whole bunch of people on the left side of the spectrum that want to spend seemingly into oblivion, like as if there's no consequences to spending at all, which is very bizarre. And there's the other side, the far right side, which is looking for some kind of cutback to the spending. Where we ended up in the middle is just a slight increase in spending. That's where the middle was. It wasn't like, let's keep things the same and work on this over the next year. It was like, let's increase spending like 5%. Does that work for everyone? Everyone high-fived each other and we all moved on. For those of you who follow the channel and who kind of pay attention to the stuff we talk about, leveraging is one of the most powerful tools you can use for wealth building. And it means taking out debt to build wealth. And one of the things that we have explained on this channel is that when you take out debt, especially over a really long period of time, like a mortgage, that debt gets devalued as time moves on. Meaning if I have, like, let's say just, for the sake of a property, for example, if I buy a property and I get 75% of that property financed, let's say that 75% equals $100,000. And let's pretend I never have to pay that debt down. It's just $100,000. Well, 30 years from now, that house is going to be worth significantly more than when I bought it. It could be worth $1 million, could be worth $2 million, and that debt is still only $100,000. And it's no longer, 75% of the overall house value. It's now somewhere closer to like 10%. 5%, maybe even lower as a result of the fact that inflation occurred. So one of the things that happens, and one of the reasons I think that the government does what it does, is that they create a bunch of debt, and in order to devalue that debt, in order to make sure that we stay on top of it, they turn around and print a bunch of money and then use that money to try and pay things down like the debt. And what that does is it causes inflation, which devalues the debt. It means it's no longer as significant to our GDP as it previously was. And we did that during the pandemic pretty significantly. And now we're paying those inflationary prices, which is what is occurring. But the debt looks smaller on paper than it did before, even though it's technically growing. And I think that's what's occurring here. And I think both parties understand this for the most part, and they're coming together in order to achieve this because they know not only does it help the government, it helps anyone with significant amounts of debt where they're using that debt to create wealth, i.e., the wealthy people. And if you're shocked the government might be helping the wealthy people, you haven't been paying attention. So moving on to our next article, Financial Times, investors bet Fed will keep interest rates higher for longer. So there's places where people will go to bet on pretty much anything. And one of the things people bet on is whether or not the Federal Reserve is going to increase or decrease interest rates. And it looks like despite all the stuff that's happening, and despite last week when we talked about how they're talking about maybe reducing their intensity on interest rates, they may not in fact be doing so. It looks like most investors are betting on interest rates going up for the time being, and the next time the Federal Reserve meets will be in mid-June. We'll certainly report on it when it comes, and we'll tell you if they raise the interest rates, if they're keeping it the same, and we can also look at the language that Jerome Powell used in order to see if he expects to be continuing to do that in the future. It looks like they want to take a really strong stance on reducing inflation. They want investors, job seekers, businesses, etc., to understand that inflation is their primary goal, and they're not going to stop from political pressure or any other pressure to try and curb this inflation and get it back under control. And I think we're all just kind of hoping and praying that we get this under control and then we just kind of scooch along as if nothing happened. It does seem weird. I know we've been talking on this channel for a while how the Federal Reserve keeps promising some kind of economic impact, and we still haven't really seen a tremendous economic impact. I just don't see how one couldn't happen at some point. I feel like something's got to break, but I don't know. We just keep chugging along. So when the Federal Reserve meets next, we'll report on it for sure, but it looks like interest rates are at least expected to remain the same for the time being, and we should keep operating as if that's the case. As for the stock market, it looks like the stock market is on a little bit of a rise. This is the S&P 500, and since Thursday, June 1st, it looks like it kind of started going up. That was around the same time as the debt ceiling was passed through the Senate. So it looks like investors are kind of sitting around waiting for things to become solid before getting back into the market. We would recommend that you just continue investing over time and don't worry about what the market does. The data shows that that's actually better. And look at all these people who are jumping in when they feel the market's better. They're inflating the values of these assets that we bought last week at a discount. So keep purchasing regardless of what happens, and we're going to come out on top. But it is interesting to note that the economy did get better after the debt ceiling was passed. So lastly, a woman in a California beach finds an ancient mastodon tooth. If you don't know what a mastodon looks like, it looks like this. A woman taking a Memorial Day weekend stroll on a California beach found something unusual sticking out of the sand, a tooth from an ancient mastodon. But then the fossil vanished, and it took a media blitz and a kind-hearted jogger to find it again. Jennifer Shu found the foot-long tooth sticking out of the sand on Friday at the mouth of Aptos Creek in Rio Del Mar State Beach, located off Monterey Bay in Santa Cruz County on California's central coast. I'm like right down the street from there. I need to go look for some mastodon teeth. I will see you guys later. I'm just kidding, but that's crazy. Like, just the thought of finding a mastodon tooth that is a foot long while walking on the beach is an insane idea. Let's take a look at this tooth real quick. Look at that guy. That's huge. It blows my mind that animals like this have walked the earth at some point. Like, that's just insane. I know my kids and I love watching stuff about this. It's super fun to see. So I hope you guys appreciated that little bit of California/Mastodon history news all coming together this week.